In today's video, we're taking a look at everything to do with the stock markets, crypto markets, and commodities markets across the world, including some big stats that I think you'll find very interesting. We've got key supports being hit in all these markets and a lot of FUD being put out there in fear. So really, how do we break this down? Well, stay tuned because we'll be taking a look together at how we're breaking down the markets right now and whether we should be fearful in 2022 or, of course, have a little bit of FOMO. See you soon, guys. It's going to be a good one. All right, everybody. Well, welcome back to our videos in 2022, and we do hope everyone had a great break. We're going to start here by talking about some of the big stats that are going to be the overlying concepts for the January, February, March period across most markets. And one of those is going to be the S&P 500, of course, the biggest stock market in the world. And we've got stats here from 1928 to 2021. And while we all know September is generally the negative month or the worst month of the year, it doesn't mean that the start of the year is good either. So from 1928 to 2021, January has been a little bit positive, February's been negative, and March has been lackluster. But when we scroll down to the next 20 years, the last 20 years here, you'll notice that actually January for the last 20 years has been the second worst month with a negative 1.1% return other than September. So are we in a period of seasonal weakness? I think the answer is going to be yes. January does tend to be weak. And when we take a look at other markets, they also tend to be weak over that January, February, and March period. And then we see stabilization in the markets from just a pure stats perspective. Another thing that does tend to occur is an increase in volatility in the start of the year. Now, some of this stat is, of course, a little bit, you would say, manipulated by the 2020 crash and, of course, the COVID pandemic stuff. But when we take a look at these stats, we notice here there is an uptick in volatility Jan into Feb and Feb into March. This period here does tend to be a little bit crazy, a little bit maybe more speculative in the markets, and the market's trying to get a bit of an idea of what's happening for the year ahead. And a lot of this has got to do with the Fed right now, inflation, and of course, what is coming, which is going to be interest rate hikes. We're going to see them as early potentially as March. Most people are now expecting a rate hike in March, and the markets are reacting to that right now. Remember, the markets react generally before the actual event occurs. That's why we get that buy the rumor, sell the fact, or we get the sell the fact and then buy the rumor, that kind of thing. So we get these very similar manipulations in the markets where they do the opposite of what many retail traders believe is going to happen out there. Now let's have a look here at the January, February, March period for the tech sector, because we mentioned before, while the S&P 500 can be weak in January, it does tend to have that little bit of better months in Feb and March. And in 2021, what did we see? This literal thing play out. We saw technology weaken after a good start. It remained slumped through March, and then it came out of the gate super hard, and investors and traders had a great couple of months there from April, May, June. Now, not hyper stock traders. We'll talk about you guys later on. But yes, many investors took advantage of this opportunity. And we were following this on the market for sure on the channel, because we do like to bring stats in with the technical analysis. Big data, stats, and a bit of fundamentals. There's nothing wrong with bringing them all together to give you a better idea and picture of the market. So when we're talking about the last 20 years of the Nasdaq, what have we got? January, not a great month, notoriously for the Nasdaq. We also have February, the worst month here, one of the worst months on record, negative 1.4%. Then March, a bit lackluster, but April and May, if we see the right technical analysis there, we can get some really great entries and some great runs on those periods. And while 2020 was a massive year in the markets and 2021 was a lot of rebalancing and move to value, 2022, I believe, and many of you out there believe, is going to be the year of the trader. The trader is really going to do best during 2022, we believe, and that's because of increased volatility, increased concerns over the Fed and how many rate hikes are going to be there. And I think a lot of people are going to see a lot of channeling, a lot of movements up and down, sideways style markets with slight gains over the year, and more of a stabilization of many of the market sectors. And we'll talk about that soon. So let's have a look here at what's performing best for 2022 so far. no surprise, energy is out in front. And we've been pretty bullish here on energy on the markets. A lot of people have been negative on it, but the TA, the technical analysis, has shown us something very different. And we'll take a look at that soon. The other thing that's really exciting about energy when you're bringing the stats together is if you actually look at Google Maps and Apple Maps and the searches that were going on in the US, you'd be surprised how big the stat was of increase in terms of people searching on Apple Maps. It was massively increased. And this was showing that people, despite the COVID stuff, were going out, they were driving around America just like they are in many places in the world, and they were going back to spending time with their families and really living a little bit more outdoors than necessarily indoors like we have seen over the last couple of years. And it was just showing in the stats. That's part of the reason why energy is doing well. We've also got financials doing very well, thanks to the Fed basically saying, look, we're going to raise rates, guys. Now, we know that that helps the financials. If you have a raising of rates, the financials are going to instantly react to that, and we're going to move up 5.43%. But things like biotech, they continue to slump. Technology, semiconductors, they're just not doing well in 2022. And this could be where the opportunity arises for many people that believe in these sectors. And when we take a look at the last year of returns, it might surprise you guys to know that energy was number one, 57% return on energy. XLRE, real estate, REITs, 44%, financials, 37%. A lot of people are talking about the move into value now, but the move into value already occurred in 2021. Everyone goes, oh, value, value, value right now. It's interesting how that's become the narrative, while the narrative probably should be, let's go look at some of these underperforming sectors right now. We've got the biotechs, we've got the healthcares, we've got the TAN, the solar indices, we've got the hyper stocks in general. These are the ones that I think many people in our community, as per a poll that we ran, are looking at and saying, hey, this is where we're seeing opportunity. Maybe 2022 is the year of growth stocks again. And I think that could be the very interesting thing. A lot of people have this misconception that rising rates, or the rates actually going up, is going to smash growth stocks. And it doesn't necessarily do that as long as it doesn't go incredibly fast. So we will be looking at these sector charts quite a lot. And if you enjoy this stuff, please remember to subscribe and smash that like button, guys, because there's a lot of breakdowns that we'll be doing in 2022 that I think you'll find quite interesting. So along that story, what is going on right now? Let's get into the technical analysis. And we'll start off here. No doubt, US 2-year. This is where people are looking. The 2-year yield is just continuously rising. Look at this thing. It's up at 0.864% after the Fed, after the jobs numbers, after everything's come out. And this is a big rise here, considering where it was in October. So all of a sudden, this is saying in the next couple of years, we have multiple rate hikes in not only the US to combat inflation, but probably in all Western nations and many countries out there. So with this many rate hikes, the market is already reacting to this. Don't put it two different ways, guys. The market is already packing in the idea of multiple rate hikes. So what we read in the news and what the market is already doing, just remember, it's already looking ahead at how many rate hikes are here. And we can see it because the market's telling us this is what's going on. Multiple rate hikes are coming in at this stage. Now, a lot of people would say, well, where are people going to? Are they moving into hedges like cryptocurrencies? And are they moving into gold and other kind of commodities? Well, the answer is certainly not gold. Gold is highly known to be a manipulated metal, and we have had some good trades on it, but nowhere near the seasonality that we expect. Now, January and December tend to be positive for gold. So if we put it in perspective, was December a positive on gold? I guess if you bought the start of December and you held to now, you'd be up. But it was all up, down, and all around, and very, very, very speculative. We moved past that 1810. We got to 1830, which was our previous resistance on the left-hand side. We sold off twice, and now we're in the middle of nowhere land again. And look, it is forming some form of support. We can see here there are buyers here. There's weak purchases, and it's closed kind of with a long leg doji on the daily, on the 4-hour here. And there could be some strength coming through, but there's no clear direction here from gold just yet. If you look at all of the markets, the only real thing we can break down is that we've got a trend line that's being held here at this stage. And for bulls, they really want to hold this trend line up. They want to make sure that it doesn't get underneath here And once it gets through that 1830, there'll be a lot of clean trades from this level here to 1870. So if you're a gold bull or silver bull, one of the key levels is going to be 1830 for 2022. If that gets broken past, big deal. If we break past this trend line on the way down, maybe underneath 1780, and then of course underneath 1760, well, that's going to be where the bears get full control of this market and it goes heavily down, possibly even into the 1600s again. So gold is at a very pivotal point, but until it gets through 1830, the gold bulls, the big discussion points, they're not going to be back in the markets just yet. Another one that we were discussing before was energy, of course, US oil and Brent. And when we take a look at this chart, it was pretty close to trading perfection over the Christmas break. We effectively had a very nice pullback. We broke through that $73 a barrel, which was a huge deal. We certainly knew it was. Go back, have a look at our other videos. We talked about this a lot. It then moved up and it pretty much hit and actually went past the level that we expected. So we expected around this $79 a barrel. We got close to that and we pretty much trading right now at that level. So we smashed through that, got to around 80 bucks a barrel, sold off, and we've got now a 2050 cross. So what's the next steps here for something like US oil? Well, when we take a look at the weekly, you'll notice this is a fairly decent weekly closure. We also have, along this red line, some very key points. This is around the $75 a barrel. Previous resistances over here. We have supports over on this right-hand side. And if we take a look at the daily here, what we'll see is there's a 2050 cross, as we mentioned. So these two moving averages, the 20 being the red one and the blue one being the 50 moving average, they tend to be what we call dynamic support. So somewhere in this area between here and here, if the market is to pull back, we expect buying pressure to come back in for the energy sector and for US oil. So somewhere around this 75, 76, if we see a pullback this week, this could be a very key level. And the next stop, if it does end up moving higher, is going to be around that 85 a barrel. And then after that, well, we'll talk about it at that stage. But it's looking positive, and this is one of the commodities that's really doing very, very well for 2022 so far. And we expected a lot of it, but it hit it even faster than I thought. In 2 weeks' time, we went from all the way from down here at about $70 a barrel to $80 a barrel. That's a great move. And that's what we've expected out of really the last 2 years of oil trading. It's been one of the most technical markets out there. Before we get into the stock markets, let's have a quick look here at the dollar index. Now, a lot of you would think, hey, if they're going to raise rates, surely the US dollar should be going up. Well, again, the expectation of the market was that this was probably going to occur anyway. And we have a great trend line here that's going to be setting up for 2022. We also have a key support here around this 95.50. So if it kind of hovers around here and ends up at about this point, we would hope that we get that buying pressure. We've now got a channel for the entire dollar index. And if it breaches either to the buy side or the sell side, we should be looking at some pretty big opportunity on dollar index pairs. So this is going to be a big one that we watch very closely for 2022, and that's the dollar index. Let's move over to some stocks before we go to the crypto market. We'll talk about Tesla. Now, over the break, Tesla did some amazing numbers, obviously smashed it out of the car park really in terms of the way that they selling cars. And I can say they're doing a pretty good job. They're obviously ahead of many people out there, and it's showing in the massive amount of sales that Tesla is seeing. Now, Elon Musk has come out and over the weekend he said, hey, you know how we charge you $10,000 for the self-driving? $12,000 now, suckers. That's what he's pretty much said. So you're going to pay $12,000 now for the self-driving. I want to know your comments down below on this. We've got a lot of Tesla followers. Do you think that's a good idea, or is that a poor idea over the long term? But regardless, the stock is doing quite well. It's doing big numbers at this stage, and we're still in this sideways pattern. So while a lot of people are getting bullish looking for all-time highs, it's just not occurring. And this is very much in line with what we've seen after every other big ramp for Tesla. We've had sideways action, big ramp, sideways action for a while, big ramp, sideways action. This one dropped off more. And this is just huge sideways action due to, of course, Elon selling his stock and everything else. So let's look at the technical analysis here. We've got that $1,000 coming up. Now we know that's key support. We know buyers come in hard for Tesla around $1,000. So for people that were waiting for the dip, they like what they saw in the numbers, possibly this is an opportunity. We've also got some other great levels here for the 2022 period. We've got that huge trend line that we've had for quite a long time here. We've got the 900 level, which could be met with the trend line should it keep coming down. And if we extrapolate that out, that's one of those lines that you're going to be using for a lot of 2022. As long as it keeps holding, it's going to be a big zone. So Tesla moving down to the 1,000. For day traders, what they're going to be looking at is they're going to be breaking down the timeframes through the session, looking for lightning bolts, looking for turnaround stories, looking for double bottoms, anything like that on the 5-minute, 15-minute, 1-minute timeframes, whatever you choose. And if they see that buying pressure coming off 1,000, that could be an opportunity for a lot of day traders. And that's really what Tesla's becoming at the moment. It's becoming an extremely good day trader stock due to the high volatility and the large moves. And for investors, they're just looking at those key big levels, the big trend line, the 900, the 1,000, and so on and so forth. So Tesla not looking negative in this market, but certainly coming back down to key zones. Now, one stock that is starting to look a little bit negative is Apple. So Apple, on many metrics, a little bit overpriced right now, maybe on the fundamental side. Some people will agree or disagree there, that's fine. We have seen some increased volatility over the last couple of sessions in terms of a little bit of weakness. We've gone on to make 3 trillion in terms of market cap and then come right back down. And that 180 just turned out to be too much for Apple. So Apple sold off from 180, but the most concerning thing is it's moved past the 20 moving average on the daily. So it's actually closed below that. And could that be a sign of further weakness here for Apple? So it's got that really sell-off kind of candle. We've got a 50 exponential underneath. We have found some buying pressure off that before, and that's around that 167. So in the next week of trade, 167 could be a key level that comes down. This zone here is where we expect some buyers to come back in, because if Apple gets underneath this area, what happens next? Double top. Where does double top go? Well, as we know with TA, we're taking the distance of this move, we're extrapolating that move out, and that pushes us back down to like those 150 areas, a much more reserved area, probably something where that key psychological number will come in as well. So for Apple traders, they're going to be looking very hard at that 167. And if it breaks under 167 and the 50 exponential, then at that stage, we're talking about a drop off down to maybe even the 150 or our very key trend line. Again, similar to Tesla, we've used this trend line now for many, many times to pick up positions. And this has been very, very good to us. So Apple is certainly not the strongest thing in the markets at this stage, but we'll have to look at the Nasdaq to get a bit of an idea of whether Apple is actually going to fall through, because remember, 167 is still very key support. Let's take a look at hyper stocks as well. A lot of people are really hammering Cathie Wood right now because her fund was one of the worst performing, or is pretty close to the worst performing for 2021. Now she's come out and basically defended her position, which I think is totally fair enough. And it's not like we're seeing outflows from her fund as much as you would expect considering the poor performance. So a lot of people still really believe. Now we're about to hit a 61.8 fib pullback of the entire movement. You'll notice here that since the pandemic, almost all of the gains, or a lot of the gains here, 61% of the gains from the bottom to the top, have actually been wiped out. And this creates opportunity in 2022. The market is down 48.49%. We've got to remember this fund holds Tesla, which isn't down, and that's the biggest position. So many of these stocks are belted anywhere between 50 to 70% or even more. And this is creating opportunity in the market. So 2022, I'm thinking a lot of people are starting to think maybe we're looking for support bases here on some of these stocks. We haven't seen it quite yet. We thought we got close to it with this base being formed around this 89 area, but it didn't quite do the double bottom that you need. And this is what you're really looking for. Just like on Barber, on any of these other stocks, we need bases to be formed. We need channels. We need lightning bolts, some form of turnaround story before you can get involved in these stocks. But RK at this stage, broken below, moving towards that 61.8, which is around that $80 to $81. And it certainly could be met over the next coming weeks. Let's move over to the indices now. Let's have a look at IWM, the Russell 2000. The Russell 2000 hit the level we thought, 226, but it was too much for it. So it hit 226, the 220s to the 226 was a pretty good trade. Congrats to anyone that took that. And now IWM is coming right back down. Now, this market should be met with support somewhere around this level. So from 216 to 210, in this area here is where people are looking for support on the Russell 2000. And a big sign, I think, in the markets that we're going into, let's say, a big crash or corrective period, and this is what we're talking about, like a 10, 15% or 20% crash, is going to be coming from the Russell 2000. This is the small cap companies. They're kind of like, if you go into the coal mine and you've always heard about the canary, this is the canary in the coal mine. And if the Russell 2000 falls underneath this kind of 210, 208 level, that's going to be when the canary is giving us the signal that we need to be concerned. And we haven't seen it yet, but certainly this will be the key zone. So we've got that 210 and even somewhere around this 215 that could be big support over the next week for the Russell 2000. Certainly something we'll be looking at in the markets. Let's move over to the Nasdaq. This one is at key support. Nasdaq has been lackluster for the last couple of months. We've seen huge rallies off this zone several times, this 15.6. We're now also near the bottom of our trend line. So if we grab the trend line over here, we'll notice that the trend line goes down to around 15,400, and this is the key level that we'll be looking at. So if the market dips down, hits this, bounces off, creates a lightning bolt, creates some kind of buying pressure, that's going to be a really positive sign that we're still in this sideways market and we're finding that buying pressure. Now, for weakness traders out there, for bears in the market, your time is coming, because guess where we're at, guys? We're really at that weekly 20 moving average. And in some ways, this is the first actual closure that we've had underneath the weekly 20 since the pandemic began. The weekly 20 has not ever closed underneath this zone. So when we're really looking at the markets here, is this showing us signs of weakness? Absolutely. Last week, we got a shooting star candle that followed through, which created that weakness down to our key buying support zone. But imagine if we have another weekly that closes like this. At the same time, the Russell 2000 is coming in and showing us that it's going under that 208, that big level there. That's going to be the canary going full tilt, saying, okay, we've got bigger correction than we thought happening for the start of 2022. So 2022 could be that real January, Feb, March weakness followed by the strength. That's the type of stats that we want to be bringing together with our analysis. So here is a key level of support. We need that trend line to hold. We need everything about this to hold if you're bullish on the markets right now, because it's a big deal how many times this has been met by support, and it's held up since the beginning of course, the recovery in the Nasdaq. So really, it's coming down to this, and this is going to be a very important zone. Same thing goes for the S&P 500, and we take a look at that on the weekly. You'll notice it's not as dire yet, but we do have these big trend lines coming in, and we have this point here, which is the S&P 500 weekly. If the market comes down to this zone and it closes below this zone, what's next in store? We'd have to think at that stage, boom, boom, all the way to the 50 exponential. And that's going to be a pretty big drop. So let's talk about what that is from top to bottom. So from top to bottom, that would give us around a 10.53% return in terms of down. That's the type of thing that many people will be looking at in a corrective period, but you won't get that signal until it gets underneath, and it must close underneath the weekly 20. This is the strongest signal in the market. So things like the Nasdaq seasonality weakness in February and January into that March period, okay, that's one thing. The Russell 2000, the big support, the canary for sure. The S&P 500 underneath the weekly 20, a huge deal for traders out there, huge deal for Wall Street and investors alike. So this will be one of the biggest points that we're watching in 2022, that one right there. And what it's showing us right now is it's, again, not really giving us the signs of full weakness just yet. It could be met by buyer support almost straight away next week. And the reasons why is because we have this long leg doji here. So if we zoom in on this and we bring that up, this is our sign of indecision. This is the major market here. Low, high, open, close. Basically the market's saying, I don't really know whether I should be buying or selling right here. Did we close underneath the low? No. So we didn't find enough weakness on the Friday session to get us below that number. If we close this week above here, Is that going to be a good sign? Absolutely. We expect further bullishness. Now, if we close below here, where do we expect to go? To the trend line, to possibly even the weekly 20. So the trend line and the weekly 20 could be met somewhere around here. So I think that's going to be a big thing when we're looking at this week. Where was the low for this session? Where was the high? Did we close above or below? Have we made a decision from the indecisive point, from the point where there should be buyers, but they're not showing themselves just yet? So remember, watch those types of things in the market. We've got the Nasdaq kind of finding support or very close to support right now. We've got the S&P 500 indecisive, and we've got the Russell showing us that it's very close to the key supports. So we've got supports starting to come in here across the board in 2022. And if they are broken, that's when we start talking about correction, or some people will call it crash. But we're very, very close to those levels. So the buyers should come in very, very soon in these markets. Now, another market that people are getting concerned about is, of course, the crypto market, and fair enough. We'll start off here with the Ethereum market. So the Ethereum market, we've got a weekly here. We've just tapped one of the key zones close to that weekly 50. Now, that's where the last drop off, or at least the first drop off here, was met by buyer demand. And we've just tapped in at a very large percentage discount, because basically the market fell off around 40% from top to bottom on Ethereum, and even more on many cryptos. So it's come down to a point you would think is going to find support buying. And why? It's $3,000. It's a massive psychological here for Ethereum. So this is where we hope Ethereum starts to find buying pressure. And we're going to have some key issues and problems coming up now. We're going to have 3,600 being a key level of resistance, because we have resistance, support. What's going to happen if the recovery does happen here? It's going to hit this level, and you would think sellers will come back into the markets. So at this stage, we're looking for lightning bolts. We're looking for double bottom style patterns. We're looking for channels, or we're looking for some kind of accumulation. We haven't quite seen them occur just yet on Ethereum, but it is at that big buying pressure that you would hope will hold. Bitcoin is kind of similar. It's coming down to the 40,000 bracket, or the area there. Previous resistances, previous supports, finding support again. It is critical the Bitcoins holds this zone. If it doesn't, where's the next logical answer for it? All the way back down to 30,000. And I'm sure many of you will not want it down at that point, because that's starting to say, well, are we ever going to go bullish again? We're starting to drop some pretty significant numbers here. 40% from top to bottom down. That's a big number. When we're talking about Bitcoin, what are we looking for? Some form of signal towards the bull side. And we do have some interesting stuff here. On the daily, buying pressure, 48. Buying pressure, the 40,800. Long leg doji, again, indecision. Low, high, open, close, indecision. Do we see decision made and some bullish action? 46,000 now, a huge level, just like Ethereum at 3,600. This level here, if we're met, which most likely I believe there will be a rally to this point. That's my personal opinion. And the only reason why is because it makes full on technical sense. If we rally up to here, then we at least get the chance to find out who's winning between the bulls and the bears. Are the bulls winning? Are the bears winning? We'll find out at somewhere around this zone. So this 46,000 seems quite probable, but we haven't got quite enough support just found yet. We've got nice base formation. As we break down the time frames from the 4 hour into the 2 hour, some people will be starting to say, well, what about, do we have a little bit of a double bottom starting to appear here? Is 43,000 kind of like that signal that we're moving to 46? It could well be. Nice base accumulation there. And there are also a lot of people going with this idea that we're in a massive head and shoulders towards the negative side. So what they're saying left shoulder, head, right shoulder. So here's the left shoulder, here's the head, here's the right shoulder. And even if we do rally up to 46, that'll be an important area, because imagine if we break underneath this zone here. All of a sudden you're talking about a head and shoulders. We're taking this distance here and people extrapolating that out to bring us back down to $10,000 or $11,000. Now, I don't think it's going to happen, but that's what a lot of the doomsday preppers for crypto are going to start saying. There's a head and shoulders there. Once we see a break under that 40,000 level, we're going to be in this. 30,000, yes, okay, there might be buyers, but realistically, this is the decline after those huge rallies. Is it like 2017 into 2018 again? Hopefully not. I don't think so just yet, but this is a very critical point. I think a lot of you guys can see why. For the week ahead, we've got some news coming out. Let's have a look here. And what we're going to be wanting to do is basically get a bit of an idea of whether there's big red news. And one of the ways you can do that is you can get one of these economic calendars. So if we're talking about the US markets, we're still in a bit of a state of some bank holidays coming through, but in realistic, we've got Fed Chair Powell testifying Tuesday, January the 11th, 10 a.m. Eastern Standard Time or ET time, New York time. And then we have here Wednesday, CPI, 8:30 a.m., core CPI, 8:30 a.m., PPI on Thursday, January the 13th at 8:30 a.m. And then if we scroll down, we've got core retail sales and retail sales. So there's a lot of news coming out about the US economy. This information will move the markets partially, but remember, we'll just pack on to the already big concept. So we're in key support ahead of Fed Chair Powell, ahead of the core sales, ahead of the PPI, and all of those types of things. So just remember, we're looking at these types of bits of news. We're not freaking out about them. The price action will show us the way. Thanks so much, guys. Have a great start to 2022. And I'll be coming back at you with daily content this week. See you soon. Bye for now.